To the #1 rated financial broadcasting show on YouTube. I don't know who rated this #1, but uh, hands up. All right. Welcome to Thursday Night Stock Charts Live. We're going to talk about the banks tonight. We're going to talk about some stocks that we're watching moving forward. Why? Because we closed out a trade in Meta today and have freed up a poop ton full of buying power to put to work and redeploy. We'll talk about that trade in a moment. We're going to talk about the small account. Folks, if you want to learn more about the small account that we are building, we began this account. You're looking at it right here, right now. I deposited $20,000 into this account on August the 11th. And right now it's grown to $21,191.08 for a nearly 6% gain over the past little over a month. So not bad. I'm going to talk about the trade we have on in that portfolio in a moment. And we're going to talk about the banks. We're going to talk about oil. We're going to talk about producer price index, inflation, where I think equities are going. And you're going to be shocked where I think equities are going, and the valuation of the market, and what you call the TTM squeeze. I'm going to rename that because I don't like the name, but that's the predominant name for it. I'm going to talk to you about that strategy. I'm going to teach you how to filter for it, scan for it. So stick around. We have a lot to go over here. Dehydrated. Okay, let's get to it. Oh, we're going to go over the weekly charts. With one trading day left to go, we're going to start strategizing for what next week looks like. So let's get to it. And the small account club, we already spoke about where we're at. We're just off our highs. Our highs were back here on September the 10th. That was at 21,506. We're slightly down on the Meta trade, and I'll show you how we plan on managing this trade moving forward. So let's talk about the trade and what we plan on doing here. So here is the actual trade. We are down at current $176.50 or 7.9%. Folks, if you want to, when we close out this trade and we go over a new batch of trades that we're getting ready to open up, or when I do a weekend commentary about the small account club, there is a link below called the 30-minute chart club. We're going to be renaming that. Sign up for that. It's a closed live stream to talk about this account in particular and how to build a small account. Private live stream. Enter your email address. We hate spam too, and get invited to that private live stream. And what we have here is what you call, it's called a strategy, a tier 2 options level strategy called an iron condor. You can see it here. Normally, I would not trade an iron condor because I don't have to. I have tier 3 level, and I would just go naked on each side, creating a strangle. But most of our members who are following the small account, they also have small accounts. They do not have tier 3. So I'm trading this account just like they must do, not like I have to, but like they must do. So that way I could show you how you build a small account. We put our money where our mouths are. So we opened up this trade a few days ago. When was this? Small account club. Where is it? Here it is. Meta. So we opened up this trade back here on the 11th. And a couple of our strikes. Actually, we opened them up independently. That's right. Yeah, let's go back to that. So we sold. Yeah, we sold to open on the 8th, the put side of the strike, because there was weakness. We sold into weakness. And then on the 11th, we sold into strength. And therein lies our edge. and we collected more premium. So at current, obviously, we are down slightly. We are losing money on the call side. We are making money on the put side. You can see here that our delta on the short delta is 8. That is too low because our short delta on our call side is 16. We need to roll this out and move it up higher. I could actually just roll the call side if I wanted to. Let's roll this out. Well, let's do both. Let's do both. So we're going to buy to close. This will be tomorrow. We'll wait until the end of the day to see how the day ends. And so we have a short put. And we're probably going to go up to a, let's just do the one leg. Let's just do the one leg. Because I don't need to move this. I don't want to buy up that that contract. It reduces our margins. We're very, very far away from our strikes. Let's just go up. Let's see what $5 does. Meta just broke out. So I want to be a little bit more aggressive than this. It broke out today. This feels right. This feels right. So what we do is we would close out this put and roll it up from 270 to 280, same exact expiration date, and we would get another credit of $1.01 that we deposit into our account, $1,010. What that'll do is that we make this profit real and we hedge further the upside strength of Meta calls. Because I do think that Meta is going to move up higher, because when you take a look at the daily chart, remember, our edge over other options traders out there is that we blend together, we mesh together options selling along with technical analysis. And you have guys out there that completely mock technical analysis, but they trade options all the time. But they could be enhancing their performance if they use technical analysis. Now, you could see that Meta broke out today. And this is the reason why I closed another position in our larger account, because I had the 320 calls expiring in 2 weeks. This stock on this breakout could be at 320 tomorrow afternoon, and I would have my face ripped off. So you got to pay attention to the charts. And when you get too close to that strike price and you have too big of a position, get out. So we closed out, because you got to keep in mind, we've rolled down calls, we've rolled up puts. So by and large, we're kind of flat. We didn't take a loss net when you calculate in all the rolls that we did. But what it is a loss is it's a loss in time. That it was an opportunity cost there where we could have made money elsewhere. So I kind of beat myself up sometimes, but it's better to be out, manage your risk, rather than hoping that this stock does not blast through 320 by options expiration in 2 weeks. And if you take a look at the probability calculator, you take a look at Meta and what the probabilities are, there's a major probability. We had the 320 strikes. We would only have roughly a 68% chance of being right on this trade, making a profit. Those odds stink for me. I hate those odds. So we will not risk that that type of capital. We will not do it. I would rather close the trade, reestablish, and go out in time, out in strike, and get more secure in our position. And that's how we live to play another day. And that's exactly what we're going to be doing here with the small account. So if again, use that link below and sign up. It says 30-minute chart club. Get invited to our live streams when I put them out there. And if you want the live trade alerts, you need to be a member. 14-day free trial offer, link below. Take advantage of it and join the gang. If you do join, you should be getting a link. Let me know if you don't get a link to our Slack forum, and that'll give you access to the small trades account, our stock trades, and this is where we BS stock market observations and option selling. And again, link below. All right. So today, let's say hello to people. It's going to be quiet night, only 10 people. Sean, hey, brother. Seymour, thank you. I should always check the comments first to make sure the audio is working. I thought all the small account. The small account is one trade with Meta. Yes, I had 2 trades on it within Meta. 2 different trades. One was a strangle. The other is a iron condor. The strangle was in the large account. That's a tier 3 trade for options authority. The iron condor is in the small account. That's a tier 2 strategy. So you are correct that we do have a meta trade in the small account. Okay. And let me know if you have any questions on that, Sean. I want to make sure it's clear where we're positioned. I know we have 2 accounts going, and it can get confusing at times. Okay, so inflation numbers came out. The PPI, that's Producer Price Index. It's the measure of inflation at the producer level. So wholesale inflation posed largest increase in 14 months, U.S. PPA shows. What did stocks do? They went up. Okay, so there are certain things out there that we pay attention to as contrarians. And that is when everybody's bullish, you want to be bearish. But that changes when I see that economic data is coming out that is negative for equities, yet equities go up. Again, CPI came out yesterday, PPI came out today. Both were hot numbers, and equities went up. When that happens, it's not about me and my opinion. My opinion no longer matters. It's the market saying you are wrong. Simple as that. Take your ego, crumple it up like a piece of paper, and throw it away because it doesn't matter. Your opinion doesn't matter. The sooner you get over that, your opinion matters, the better off you are. If you're saying equities must go down because inflation was hot, yet they go up and you keep shorting, you're going to go bust. You're going to go bust. So that's why when I saw Meta break out today through resistance, I said, okay, okay, you win. I'm not going to fight it. This stock could go up 20 points tomorrow. I could take a small flat loss and say, let it ride. And tomorrow I'm sitting with a massive loss. Why would I do that? The market is speaking to me. CPI hot yesterday. Equities went up. PPI hot today. Equities went up. What are we talking about? There's nothing else to talk about. Equities want to go up. I could argue all I want. I could scream to you from as loud as I can from the rooftops. Schiller PE ratio, 30.97. It doesn't matter because back in 2000, we were up at what, above 40, 45? So it's not as if we can't press up higher here for all the wrong reasons, but we can. So we want to go into each trading day not saying that the yield curve this or the yields that, inflation this, and the dollar that. If the trade is going in the wrong direction, despite all the data coming out saying it shouldn't, you're on the wrong side of the trade if you're short right now. So we're going to go over the weekly charts in a moment. You're going to see that the Qs have broken out, and I'm going to show you some scans where, frankly, I'm seeing some great buys in the banks. I'm seeing some great buys in industrials, and we'll talk about it in a moment. What else? Oil. Crude oil prices rise above 90 for the first time since November of 2022. What were we doing in 2022? We were in a bear market. Oil prices are now a massive 35% in 3 months. Equities broke out this week. We are now incredibly 29% above the levels that was the U.S. targeting to refill the Strategic Petroleum Reserve. Meanwhile, there are less than 46 days of supply left in the reserves. The classic sell high and buy higher is coming for the U.S. reserves. This is going up higher. Oil is going up higher. Again, oil weekly chart is going up higher. They tried to take it down yesterday. What did they do today? Here's the reversal bar yesterday. They ripped the face off of shorts today. Equities went higher. So why did they go higher? Why are they going higher? What's the proximate cause? What can we point the finger to and say, okay, now I understand. Now I understand what's going on here. The reason why the markets are moving up higher is because of a pause in rate hikes. Now, it's very short-sighted that they're going to pause on a rate hike, because the knee-jerk reaction on a pause in a rate hike may just be that equities move up higher, perhaps even parabolically higher. We can't rule that out. But it's not going to end well, because the yield curve is going to be steepening. They will be normalizing. Equities rallying on parabolic levels is inflation as well. And also, September's a done deal. Done deal, no rate hike, and this is moving up higher in one day. Think about it. Wholesale PPI numbers came out hotter, much hotter than expected. Yet, the probability of a Federal Reserve pause next month went from 57.4 yesterday all the way up to 64.1 today. That's on the heels of a hotter CPI and a hotter PPI. I don't make this up. These are our cards that we're dealt, and we have to play the hand. And right now, the market is betting no Federal Reserve rate hike. Could this be a trap door that's got a piece of cheese in it, and they're trying to lure the rats in to go getting that piece of cheese so that when the time comes, the big dogs could sell into those rats and the trap is closed? Probably. That probably will be the case, because you have a lot of stocks that have broken trend vis-a-vis Apple, Netflix. These stocks, especially Apple, is broken. They need a rally. Every single major hedge fund out there and mutual fund has Apple. They need to create a pool of demand to get rid of their Apple. Apple is a dead stock to me. It's dead because there are no new products. It's dead because China's closing the door. It's dead because it's broken a weekly support level. Weekly trend is dead. It's in the rearview mirror. Are they going to let that stock just go straight down without a fight? No way. They have too much of it. They will pump it up through the sky so they can get rid of it, and they will sell it to the little guy. Don't let that be you. Trade the momentum. Just don't fall in love with the stock. You want to buy Apple on a breakout? Great. Use a trailing stop. Get out when the time is right. Make your money, exit. Make your money, exit. Make those profits real. I traded a market like this in 2020. All right. And parabolic, if they are going to drive this market parabolic, it is truly a rip your face off event. You do not want to fight it. You will have a 50-point up day, and then a 20-point down day, then a 75-point up day the next day. That's how crazy it gets. And it just goes on and on and on. So are we setting up at current for the greatest super cycle top of all time? I don't see how that could be argued. I just don't see it. Back in 2021, when we last peaked out, we had a market cap or the Buffett indicator overvaluation of 215% of GDP. What that means is that the stock market was more than twice the value of the entire domestic product, the gross domestic product of the United States. And right now we're at 175% of market cap, the second highest overvaluation in history. And interest rates are measurably higher now than what they were back in 2021. I should say 2022. It was right in January of 2022. So this is the environment that we're in. Now, this gentleman, whoever posted this, is betting that we're at the top right now and that we could roll over. Listen, I could go either way. We're going to go over the weekly charts in a moment. I can only go by how we're closing out the week and what are we doing? Are we breaking out? Are we breaking down? If we're breaking out, the probability that we go up higher next week is very, very good. If we're breaking down, then the probability of us moving lower is very, very good. Simple as that. Now, I want to talk a little bit about the banks. I'm not talking about the regional banks. I'm talking about the money center banks, those that cannot fail. Let's not mix up our banks here. Okay, we are talking about creme de la creme, cannot fail banks. And what I want to show you is a chart. This is a monthly chart of the XLF. That's the Financial Select Sector Spider Fund. It's the banks, the big boys. Now, I wouldn't buy the ETF. This is the ETF. But I want to show you something. Over here, you can see in gray, I have Bollinger Bands set up. They are in gray. And in black, I have the Keltner channels. That just basically measures the rate of change. So when you see usually the Bollinger Bands trade outside the Keltner channels because the Bollingers are sensitive to one direction. They're directional. As soon as you start breaking out, moving up higher, the Bollinger Bands move up higher. And the opposite is true. You start breaking down, Bollinger Bands start moving down. The Keltners are a little bit slower. They're a little bit slower. They really manage the range. So whenever you get the Bollinger Bands trading within the Keltner channels, that is an event. I'm not going to say it's a bullish event, nor am I going to say it's a bearish event. You need to watch for the breakout because what this is telling you on the banks is that there is a big move coming, a very, very big move coming in the banks. I'm going to give you an example when we go over Morgan Stanley in a moment. If my father is watching this, or if he watches it on the replay, he's going to be smiling ear to ear tonight because he loves Morgan Stanley. So the money center banks are poised to have a rip your face off rally. I'm going to show you how I found this chart in a moment. But before we leave this chart, let's talk about it for a moment. Let's get our crayon out and say, okay, if we cannot define simply based upon the Bollinger Bands trading within the Keltner channels, which direction this stock or ETF is going to trade, well, then we got to draw our trend lines and say, if this, then that. If we break out, then we buy. If we break down, then we short. What are we doing? We're breaking out. We broke out technically 3 months ago. We failed to hold it last month. This month we're back above resistance. Does it hold it? I don't know. That's why I'm not rushing in right now to go buying the banks. But the probability, and that's what we deal with right now, we're dealing with probabilities. And don't ask me what TTM means. I have no idea. I didn't make that up. I'm going to rename this. You can also see that momentum. We're looking for clues. Which way is this going to go? We're seeing a breakout here. We are seeing the stochastics moving up higher with higher lows and higher highs. We're looking good, bullish. RSI getting ready for a breakout. We also have higher lows here, looking really, really good. So how did I find these? Look no further than our friends over at TrendSpider. Bravo to them, because I was playing around. I was looking for a really good way of finding these opportunities, and I used a couple of different platforms. I used stockcharts.com. I used thinkorswim. The best one was by far TrendSpider. And for those that are watching live or even on the replay, link below. They have a 50% offer going on right now. Don't use my discount code. They have a 50% off offer. Use the link below. It'll take you over there, and I'll show you now how I found this trade. And if you sign up, I will send you the script so that you can have it as well. So what I did is this. I went over to the market scanner. I created a TTM squeeze. This is showing as daily. I'm going to change this to monthly. And I'll show you how I found these stocks. I'm just scanning the S&P 500. I only want the creme de la creme. All right, so you can see that Citigroup is on here. Not best of breed. Halliburton's on here. Apache's on here. Cisco's on here. Philip Morris is on here. Lyondell is on here. AMD is on here. Wow. AMD is on here. Qualcomm's on here. Here, KeyBank is on here. Actually, that's breaking. That's not key. Sorry, wrong symbol. Wrong symbol. Key is the symbol. That's strange. Yeah, Key Corp. That's on here. Hess is on here. So we have energy. Look at this. Look at Hess breaking out. Look at it must have moved big today. Big move up higher. Texas Instruments is on here. I don't think this is breaking out though. I think it may break down. Honeywell is on here. This is getting ready for a breakout. There are a lot. Salesforce.com is on here. Palo Alto Networks. They've been on here. Look at the run up higher on Palo Alto Networks. Goldman Sachs is on here. These names haven't run yet. This is why I like the banks. UNH is on here. That hasn't run yet. I don't know which way that's going to go. That may break down. Costco is on here. That's breaking out. These are monthly charts, folks. These are no joke. This is not day trading stuff. BlackRock is on here. This is going to break out. Where is my Morgan Stanley? Don't make a liar out of me. For whatever reason, it's not showing up here, but it is showing up on I also have it set up here to show you on the charts. So here's Morgan Stanley. I'm going to go to a monthly view. And you could see here that Morgan Stanley, see these red dots here? These are indicative of an event, a congestion. In fact, let me show you. I have a different variable, variation of this chart, and I use it to validate. Sometimes you'll get symbols that appear on a scan, and they don't qualify because for whatever reason, I don't know why. So what I did is I created a TTM validation tool. And what I did is simple, right? Here's my TTM squeeze indicator. When the red dots appear, that means that there's a lot of compression. That should mean that you have the Bollinger Bands trading inside the Keltner channels. And so I created a validation tool. Here are the Bollinger Bands in white, orange, the Keltner channels. Validated. Morgan Stanley is in all probability going to rip up higher. And what has it done in the past? The last time we saw this, it was back here in 20. They started firing off this light blue color, and all of a sudden, the shares went from a low of $27.21 to a high of $109.73. That is a massive rally. So I think that Morgan Stanley is going to be having a rip your face off rally within the next month or so. If you're not currently a member, you want to be a part of that trade or any one of these that I put on, let me know. Sign up, 14-day free trial offer. Is that what he called it? I did get it from John Carter. Trade the market. I see. It needs a better name. Okay. Thank you for that. I had no idea what it was about. Trout fly. Thank you very much. And one thing that John Carter, and you brought him up, and credit out to John, is that going back to this chart, it's important when you're using this tool, have your moving averages stacked appropriately. Like right now, we are beginning to break out. These are stacked perfectly. You have your low duration averages. This is the 8-day or 8-month moving average above all the other higher time frame moving averages. It's perfectly stacked. All we're looking for now is a breakout on Morgan Stanley. And over the past couple of days, folks, this thing has been on a tear. The question is, does it last? We don't know. We need to see a pullback, a higher low, and then a breakout to a new higher high. Then we know game on. And we'll probably be using I'll either buy common stock and sell calls against it, or I will buy a call spread, meaning I buy a deep in the money call and I sell a deep out of the money call. And that's called a debit spread or a bull spread, bull call spread, whatever you want to call it. Cherry's Jubilee with whipped cream, it doesn't matter. Back to TrendSpider for a moment. I want to take a look at a couple of other these names that are looking really, really good. Honeywell. I'm focusing right now on the industrials because you have a reshoring going on. And I did a live stream about this a while ago. I think it was a live stream, or maybe it was just a video about the reindustrialization of America. You could search videos on my channel, reindustrialization of America. I did a video on it about 2-3 months ago, and it's really starting to play out now. Let's bring up Honeywell. And these are your industrial names. Let's go back to the monthly chart. Forget about the daily chart. Pay attention to the higher level view. Here are your red dots. This is a chart that's getting ready to have you rip your face off rally. Is it as positioned properly as Morgan Stanley? No, it's not above its 21 period moving average. Yet you still have the 8-period moving average trading below the 21 period. That needs to get resolved. But I would be a seller of puts here. I would buy the common, nibble on it, add more on a breakout. I'm liking Honeywell. I think Halliburton was another name that was on that list. Let's bring that up. And these are big old stodgy names. It's firing off already. Get low to this. Tell me that's not sexy. These names are looking very, very good. What else do we want to take a look at? What else is on that list? I had one. It was so good. Let me go back to it. Definitely not BlackRock. I hate that company. JP Morgan's on here. Dollar Tree getting annihilated. Here, let's bring this up. Dollar Tree was on this list. And now this thing is getting hammered. Let's see when the market's told you, get out. Back here. So here we're in a long bull rally. And then right here was your first red dot. That was your clue. Trouble. Trouble's a brewing. And wow, we broke down and we broke down really, really hard. Now we're looking to buy it. Okay, let's go over the weekly charts. Let's see how we're poised to close out the week. What I do want to point out first is that the yield curve, let's go to comments first. Hi, Bob. You are number one in financial education. Well, thank you very much. I appreciate that. Thank you. Sean, thank you. I didn't get today. I'm out tomorrow. Okay. Oh, on the you still in on the strangle? Okay. All right. Yeah, we're out of that one, pal. Sorry about that. Okay. And we just did it right at the close, literally right at the close. And probably we could probably get a pullback tomorrow morning. That would be a great opportunity for you to get out. Yield curve, weekly view. We're higher on the week, no breakout. Not much to talk about, but the quarter is coming to a close, and the quarterly chart remains very, very bullish. Therefore, longer term, bearish for equities. Yields consolidating on the week, getting ready for a breakout. Should be bearish for stocks. They may shrug it off. Bonds, TLT, 20-year bond ETF. Down now on the week. Was up, now down. Tips were up, now down on the week. Treasury inflation protected securities. US dollar on a tear. But there's something very strange going on out there in the gold mining stocks, and it's really got me wowed. I'll talk about it in a moment. Will the dollar rally continue? We don't know. But to help us give us clues, we take a look at the yen. How's the yen doing? Where is it? It's trying to break out. We're up on the week, but we're off the highs, trying to break out. Where's the euro? Euro, here you are. Euro very weak, probably going lower. Dollar, therefore, goes higher. Volatility, very weak. We took out not only last week's lows, but the prior week's lows. Very, very bullish for stocks. There's a tremendous amount of apathy out there, folks. A tremendous amount. So I'm getting the feeling they're gonna take this up higher, a lot higher. Dow Transports, bullish key reversal on the week. volume light. Let's check out the daily price action. It broke back out again on volume. Dow Jones Industrial Average up nearly a percentage point on the week. We're at the highs of the week, close to a breakout, very close to resistance. Daily view. We broke out today on a daily time frame. This is why we closed out the meta trade today. Spiders, weekly. Bullish key reversal bar. Stokes moving up higher. This wants to go up higher. Assuming that we close strong tomorrow. You know, if we have a horrible sell-off tomorrow, well, then the weekly chart doesn't matter anymore. But as it stands right now, this snapshot in time, we're looking at a potential breakout here on the S&P 500. What's your boy to do? Trip Qs. It's a breakout. Again, this takes us back to that meta trade. You know, what are we going to do? We're going to fight it? It doesn't make sense. Too much capital on the line. Not enough reward for the risk that we have to accept. Therefore, we move to the sidelines. Raise capital, redeploy, live to play another day. Daily chart. On a daily time frame, we are right at resistance. So as I'm talking about this weekly chart, remember, one trading day left to go. As far as I'm concerned right now, on this chart, this is technically a breakdown and they're trying to recapture prior support. This can fail as soon as tomorrow. And I'll probably be sitting there kicking myself for closing out the meta trade. But it's the right thing to do, even if this breaks down, because you as Gordon Gekko said, you can't piss in the tall straw with the big dogs if you don't have your capital reserves. Simple as that. So why take the risk? You have to. We're not in the business. And this is especially for those folks that are new out there, small account, and a lot of you are, and that's fine. That's why we have the small account club. I love chatting with you guys and gals because for whatever reason, we have a lot more women now, and that's good stuff. So our job number one, when we wake up and we turn on our brokerage accounts, we bring up our charts, we look at the news, see what's happening in the markets, we're getting ready to listen to whatever CNBC has to puke out at us. Our number one mission that day when we get out of bed and we check our phones for the futures action is not how am I going to make a buck? It's how am I going to manage my risk? What parameters am I going to use to manage my risk? In the case of Meta, my measure, and I mentioned it last night on Market Wrap, was that if Meta closed above $9 per share, I would have to exit the trade. And it did. It broke out today, closed at 311.22. That's the discipline. And it could fail tomorrow. It could break down tomorrow. But that's the discipline. Because what's going on here? We have a drift. It's a bias bullish drift. The momentum is to the upside. Again, if you have a 35 delta call option that you are short of, not long of, short of, and you get a 20-point move, this is a $300 stock, $311 stock. A 1% move is $30. Actually, I'm sorry. What am I thinking? A 10% move is $31. A 5% move is $15.50. Can we not have that size of move within the next 2 weeks? I think we can. And That type of a move would be devastating when you are the casino and supposedly not the gambler. If I would have held this position overnight and gone into tomorrow with it or into next week on a breakout on the Qs, then I'm the gambler. And that's not a position you want to be in. Back to the weekly charts. The banks. No breakout on a monthly time frame or a weekly time frame, but man, we are close. Stokes hooking up. I haven't liked the banks in a long time. And don't get confused with the regional banks, KRE. They're up this week as well, but nowhere near as good looking as the Pimp Mac Daddy Money Center banks. Technology is actually down on the week, if you can believe that. That's a shocker. I'm shocked. What's the semis doing? They're up. So tech is down. Semis are up, but tech is down. It doesn't make sense. Wonder what's doing that. LABU, I haven't looked at this in a day. Not doing anything. I don't want to look at it. That's biotech. Nothing to look at there. Staples finally caught a bid this week. This is looking interesting. Daily view. Good day. Nice rally today. Up over a percentage point. Consumer discretionaries. This is why I'm thinking that there may be a parabolic move on the market. And the reason is this, is that you have energy prices going through the roof, inflation prices going through the roof. The Federal Reserve may not look at food and energy, but the average consumer sure as heck does. So the fact that you have the consumer discretionary names rallying really, really strong tells me that there's something, the wheels are beginning to come off this market. And it could take a while for them to wobble off the axle. So we may be going down the road, a volatile road, or the carriage going woo, 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 and all of a sudden the wheels go flying off. But that's your March 2020 event, when you go to work one day and the phones stop ringing and you know that business is done. And the reason why I bring that up, the reason why I pulled that out of my hat, I was down in Florida in late 2008, early 2009. I was looking for properties right after the bubble burst in the housing market. And I'm out with, hey, Talon, welcome. I'm out with a realtor, and we're looking at properties. And I said, I got to ask you, how long have you been doing this? She says, oh, about 15 years. And I said, so she's seen peaks and valleys before. And I said, I got to ask you, when the boom ended, how did you know? She goes, honestly, I came to work one day and the phones just stopped ringing. It wasn't as if they slowed down. They just stopped ringing. And that's where I pulled that out of. So I was struck by her sincerity. So this is going to go up. The consumer is maxed out on credit cards. Rates are going up higher. They're bidding up discretionary names. Why? Because of a pause. The only problem with that theory, and the market still doesn't get it, they still don't get it, is that usually after a pause, and especially a rate cut, equities go down. That's what history has taught us. You may get your knee-jerk reaction, a relief rally to move up to the upside. It's the wrong reaction. So we'll trade it. We'll trade it up, but it's probably going to be the wrong reaction. Emerging markets holding up well. I got to be honest with this. Strong U.S. dollar holding up well. I think that this is the pause story that's going on here. Energy, it's ripping the face off of shorts, and it's going to continue. West Texas, we already did this chart. New 52-week highs, up 35% in a short period of time, 3 months. Gasoline prices now moving up. We've seen oil prices move up dramatically over the course of the past couple of months, gasoline hasn't done all that much. Net, net. Now it's breaking out. Natural gas, not much to talk about there. Gold, down on the week, no great shock. I want to spend a moment here. I want to update the chart because there's something bothering me with the, why is this green? With the gold mining stocks. So there's resistance at 1950. We're holding 19. Are we holding 1925? Yes. Volume is light to the downside. Daily view. Bullish key reversal bar on gold with Stokes nearing oversold levels. So what we want to pay attention when you're looking at the stochastics and you're using these as a tool, a lot of people just use them as a singular tool. I do not. You're not supposed to. What you're supposed to do is do this. Say, okay, as these Stokes correct down below 20, do we get a higher low? And with that, do we get a higher low in price? Or are we continuing to press lower on stochastics and also pressing lower on price? If we begin to hook up on momentum, which are the Stokes, we will probably now, because we do have a higher low, assuming that this holds, and we will probably break out on gold. Now, the sector that has me amazed right now, because I've been trading the gold mining stocks since 2015, and the fact that you have the US dollar up 0.25%, more than 0.25% on the week, yet you have the junior mining stocks up 2.5%. That's unheard of. It's unheard of. Let me illustrate. Let me illustrate. Let's do a blank chart here. And let's just do the GDM. That's the gold mining index relative to US dollar. Okay. And let's bring up correlation. Actually, no. You know what? That's wrong. I'm doing this wrong. But this is interesting. I want to see what's outperforming. On a gold is outperforming now the US dollar. And both are up. That's so bullish. Now let's take this off. This is what I should have done initially. Go back down to correlation. Correlation. US dollar. I want the US dollar above, so it's easy to read. We will make it green for greenback. And you can see that looking at this chart here, there is an inverse correlation. And for the most part, it's usually a flat line of death, inversely correlated. And now they're both trading up. Usually that only happens during a geopolitical event, a fear event. So what conclusion could we draw from this? I think that the gold mining stocks are front running the Federal Reserve next week. I think what they're predicting is that we're going to have a Federal Reserve that is going to be sanguine. very dovish, which I don't believe is true. I think that they're going to pause, but they're going to talk hawkish, act dovish. But I think the gold mining stocks will probably see through it, and they may just move up higher if the dollar sells off. Because this current correlation, dollar and gold mining stocks, the fact that they're moving up together, trust me, it's temporary. Look at history. This is all you need to do. Look at history. Any one of these events back here corresponds, when they're trading in tandem, corresponds with a geopolitical event. I think that's what we have to go over. Yeah. Oh, we have Tesla too. We're doing really good on Tesla. We opened up that trade this week. All right. Excuse me. Chart request. All right. Oh, you know what I want to bring up? Amazon. Somebody just put. I've been wanting to look at this. What about Dish? I don't talk about fundamentals. I'm an idiot. All right. You know what I do with fundamentals? I do this. I come over to my friends over it here, and I let the gods of Investors Business Daily tell me what to think. That's what I do. So is this a very good stock? No, it is not good. Avoid. If Amazon's going to buy it, they must see some value in it that's going to help be accretive to their business. But otherwise, this is not a standalone quality stock. It's poor, very, very poor. Negative earnings growth. Excuse me. Estimated earnings change, negative 78%. 3-year earning EPS growth, 5%. EPS change last quarter, down 62%. Avoid it. Those are the numbers that matter to me. And the stock, I wanted to take a look at Amazon to see, because I've been loving that chart on a weekly time frame, and it broke out this week. This month, I should say. On the week, it's broken out as well. Look at this TTM squeeze back here. Interesting. All right, let's do some chart requests. Oh, another name. This is on a daily time frame that's looking really good. Is CAT. A little bit extended on a monthly time frame, but on a daily time frame, it was looking really good. Yeah, it broke out today, but the monthly chart's a bit extended now that I'm looking at it. I wouldn't initiate a new trade here, but it probably is going to go up higher. All right, let's do some chart requests. I had to go to the members area, pay homage to my members. Apple, that's it. Okay. What else do we have? AAPL. M is death right now, but it's an opportunity. MPW. 7 o'clock now. We will wrap it up with these. If there's a member on, of course, I will take your requests. But we'll leave it off with this. Okay. And folks, don't forget TrendSpider, TTM squeeze. If you sign up, I'll get you that formula on how to set up this scan. Go over to their website, use the link below, and get 50% off end of summer sale. Okay, let's do it. Apple. Weekly view, holding support. Uh, I don't like this right now. It's holding support, but it's still threatening to break down. If the Qs continue to break out, I'm convinced that they're going to try to rally Apple along with the rest of the market so they can lighten up in advance of the big boom. Franklin, welcome, brother. Biden proposed receiving royalties from miners mining on federal lands today. I can't stand that snake. Daily view. Good day today. Does it break out? That's the big question. I may be a buyer after this pullback. Not because I like the stock. Okay, what else do we have here? Macy's. So to go over this chart, we want to go and take a look at the daily chart with RSI. And you can see that we have RSI at around 1920. Let's call it just below 20. Kind of oversold. I think that this is getting ready for a pop. But the key is, where is historical support? Does today's low hold? I don't think it does. Maybe it does. Maybe it does. $11.12. What was the low of the day today? We may get one more push down here on Macy's. Daily chart. We're at a couple of support levels below. 30-minute chart. They rallied it. The question is, can they rally it through this upper band of this Keltner channel, or do they sell it off? Just like what they did with Dollar General yesterday. They rallied Dollar General yesterday afternoon, and then they walloped it this morning. Here was the rally into the close yesterday, and they hammered it today down below support. We're looking to trade this one as an extreme oversold stock. Dollar General. M is looking okay. I would watch for it a couple of days, intraday chart, and I would be looking for on here. Let's bring it up on. I'd be watching for these Stokes to hook up, which they are. RSI is hooking up. Oh, daily charts, RSI is now at 25. Nice consolidation here. I think this is a buy with a stop loss right below $11.16. Just make sure that volume is very light. Yes, it is, to the sell side. Yeah, MACD histogram went positive today. I think you could nibble here. Tight stop though. And don't stay too long. Take advantage of the short covering rally, and I would get out. Don't stay too long. This is not going back to its all-time glory. MPW. This is going to break lower. You want to avoid this like the plague. I think that this breaks, and we probably got into a 4 handle, which is the lower band of the downtrend channel. You want to avoid this. Thank you, Ryan. Appreciate it, man. All right, folks, that's about it. So MPW, I would avoid it. Broke out today, but I would avoid this. I think ultimately it gets broken lower. And with that, folks, thank you for being here. Like, subscribe. You know the deal. Don't forget about TrendSpider, 50% discount code. In fact, I give it away free to our silver and gold level members. We also have a titanium level. So if you're new to trading, you want to join up, titanium is for you, unless, of course, you want TrendSpider, then go silver or gold. Folks, have an awesome trading day tomorrow. May it be profitable and a great weekend. I will talk to you soon. Members, talk to you tomorrow. Be well.